Okay, so this is the 21st of March and end of market review for the 21st of March. So today we had another push to the downside, right? So price is currently within this fair value gap here. As you can see, after price took this highs, right, took this buy side liquidity and this buy side liquidity as well. So we're seeing maybe a retracement. So if we take the Fibonacci from this low all the way to this high, maybe price could still come back to equilibrium or maybe below, right? We have some lows here, so there could be some sell stops below this low. We have a fair value gap below this low as well. So if this is like sell side liquidity and then fair value gap here, so maybe price could come into this level before pushing to the upside. Who knows, right? But for now, this is where price is. So we have to look at what happened today, breaking down price action all the way from Asia session to New York session to currently where price is at. So I'm going to go to the 15-minute time frame now so we can look at everything that happened. All right. So everything I mark out here is the high and the low for the day. So this is the high for Monday, Monday's high, Monday's low, right? So what did we see coming into Tuesday, right? We had a bit of consolidation and then we had a bit of expansion, right? So we saw price move sideways here a bit, right? Price move sideways a bit here and then price move lower, right? Lower pre, all this is pre-London movement, right? And then price consolidated again in London session, right? This candle right here, this is London open. So we had a bit of consolidation and then we had a breakout and then we had another retest of this in New York. So today I actually had a missed trade. Today. I actually missed my entry. As you guys know, well, my entry is from 2:30, right? So if you look at this, this is 2:15, 2 p.m., 2:15 p.m., 2:30 p.m. So my entry was meant to be somewhere within from this point, right? And I missed my entry, and I'm going to go over it. I'm going to go over the setup. I'm going to go over everything. But let me track price back to here, right? So from studying ICT concepts, right? He talks about price delivery. There's a concept called price delivery, and he says price goes from consolidation to expansion, right? He says every time price consolidates, that means every time price moves sideways. So let's say this is a consolidation, right? Price is going to expand in a direction, and then he says after an expansion, we're either going to see a retracement. So a retracement is like a pullback, so something like this, and then a continuation, right? Or we're going to see consolidation, right? Expansion. After every consolidation, there's always going to be expansion, right? Expansion. What comes next could be reversal. So reversal is price going in the opposite direction. So that will be something like this, right? That will be something like this. consolidation, expansion, reversal. Or price goes into consolidation, expansion, and then back into consolidation. And if price goes consolidation, expansion, what's going to happen next? Expansion. So this is an example of what we saw here, right? We saw consolidation in Asia, we saw an expansion in pre-London, we saw another consolidation in London, and then we got another expansion in New York session, right? So at least, even though I missed my entry today, I'm still able to like understand what happened, right? Looking back on the chart, I'm still able to understand what happened with price action. And it's very good that at least I'm getting to the point where I can read or I can understand price action, right? Using ICT concepts at least. So that's some sort of progress, right? It's very good progress. So I want to drop down to the 5 minute time frame now so that at least I can go over my execution. Let me set this line so it's visible on the 5 minute time frame. Okay. So dropping down to the 5 minute time frame now. Like I said, price was consolidating throughout London session, right? Price was moving sideways, but I don't trade London session, right? I only trade New York session, and my entry time when I start to look for my entries is after 2:30 p.m., right? So let's look at price action right after 2:30 and see the potential trades. So look at this move to the downside right here on 2:30, right? When I see a candle move like this with speed, right? This creates a fair value gap or a liquidity gap or like liquidity void, sorry, right? So this is an example of a fair value gap. So you can see how price moved quickly away. You can see how price did this 1, 2, 3 candles. When price was moving up 3 candles, and you can see that just one candle has covered the move of approximately 3 candles, while leaving so much gap between that candle, right? So when we see something like that, we can be like, okay, maybe there's an opportunity there. This is the 3 minute time frame right now. Let me go to the 1 minute so that it's clearer. All right. Let me take price back to here. Yeah. So now we're on the 1 minute, right? Now this is the candle, right? This candle here, this one has created this gap, fair value gap, right? You can see this candle had a wick. This candle, let me move this. Let me set this chart real well so everything is visible. Okay, we had a wick on this candle, and then we had the bottle of this candle. This wick of this candle comes in contact with the body of this candle, right? And this candle, right? You can see this candle has a little wick, but you can see the distance from this wick, and you can see the body of this candle. This candle is majority of just body, right? And you can see the gap from this wick all the way to where this candle closed. You can see that there's a gap there, and this wall we refer to as fair value gap. But I'm going to let the next candle form, right? You can see the next candle, right? So you can see the distance between here all the way to here. And this is how I build my entries. This is basically my model. Basically, when I see displacement like this after 2:30, right? It kind of that's how I like to find my entries, right? Fair value gaps after like 2:30. And there's something else I want to point out here. You can see that price just raided buy side liquidity here, right? Price just raided buy side liquidity. So when price breaks this high, right? Let's say some people were trying to go long, right? Especially when you see how price is moving here, you can see that price took these lows, right? Took out this low, right? So you run sell side liquidity. Price runs sell side liquidity. This high. So let's say someone sells this market here, right? Let's say someone takes a short on this pullback. Let's say you see price do this, pullback like this, you enter a sell here. And let's say you're targeting the lows, and you see price do this, right? You see price move like this. When price breaks these lows, there's going to be stops here. Let's say you move your stop to break even, or even worse, let's say when price breaks these lows, it triggers your sell stop order. Sell stop order, you have your stop loss above this high, and you're targeting the lows, right? What does price come to do? Price comes to stop you out and then continue in that direction, right? So when we are talking about buy side liquidity, this is what we're talking about. When price runs sell stops, so let me depict it. And this is for my own learning as well. So this is really helping me learn. This is why I chose to actually do this um, end of market review so that I can learn better. Sell stops. Sell stops are below this low, right? So stop orders below this low. When price breaks this low, it triggers the sell stops. They have their stop loss above this high, right? So I'm going to say buy side liquidity. Buy side liquidity. And let me do this like this. Bottom. Okay. So sell stops were run, and also same way there are sell stops here, there are buy stops here, right? So buy stops in the sense that when price broke this high, right? People got into what? Buys with their stops below here and maybe their targets all the way up. But if you look at this market has been trending down. This market was trending down. So we know that okay, it's more likely for sell stops to be here, right? And this is how when the way ICT explains it, it says like this is why you might for beginners that like they will take trades and then they'll get stopped out and then trade run in their direction. So this is just basically that. So looking at this fair value gap, this is how I like to get my entries. So how I would have gone about this trade I would have looked for the mean threshold of this candle. That's like the midpoint. So that midpoint will come in here. The midpoint of the candle or of this candle would come in here, right? So what I would just do is wait for price to get to that midpoint, right? Or I could even take my entry when price comes back into this level, right? Have my stop loss above this candle. And now, where would be my targets, right? Targets is very important. Where would be my targets, right? I know that we have sell side liquidity below this low, right? So that is a good target. That would be a good target for me. Sell side liquidity below these lows, right? So that would be a good target for me. So going back to the 1 minute time frame, real quick. Now that we have a target. Now know that this is also a target here. This is also a target here. So we have two potential entries. This entry could be risky because imagine if price doesn't get back into that mean threshold, right? If price doesn't get into that mean threshold, it would have been a riskier entry, but it would have given us like tighter stops, more risk to reward by the time we get to this point, right? So that's one way we could have gone about it. This is another way we could have gone about it, right? So these are the two entry points that I could have had here or here, right? So for the sake of simplicity, I'll just go with this one, or maybe a few pips just into the fair value, right? And let's see. You can see that we got tagged into the trade. The second um level, the mean threshold actually got hit. So this is how I would have entered this trade, and this entry would have been around like 235 235 would have been this entry, and then we would have just held this trade, and boom, TP smashed. So this was a fast trade. This was a fast trade. This could have been our trade for today using the trade model, right? Using our trade model. So this is the setup that I like to take using fair value gaps, right? You saw the end of market review I did yesterday. The fair value gap that I was trying to trade price above actually got respected. So today was more of a missed trade. So I actually missed this trade setup today. So I didn't even take it. I think I was like on the charts, and then I stepped away for a minute and came back, and I saw that the setup has already happened. But even at that, I was able to like call it out. Immediately I saw that I missed the trade, I was able to like call out that setup. So that's very good. Like seeing that I'm getting to the point where at least I'm getting to like know my setup, right? I'm getting to know my setup. So that's a very good thing. So this was a trade that I actually missed today, right? And it happens. I just need to remind myself that it happens, right? It happens in as much as I don't want it to happen, but this is something I need to put in my journal, right? This is something I actually need to journal. So maybe after this video, I'm actually going to like take a screenshot of this and just like put it in my journal. So yeah, and just to continue price, just to continue with what happened throughout the rest of the day, right? Price continued to push down. So today was a very volatile day, even though we had like consolidation in London. Initially, when I saw consolidation in London session, I was like, maybe the market is not actually going to move today. But it actually turned out that, I was wrong. The market actually moved over how many pips today from the expansion of from that consolidation. It moved about 260 pips, over 260 pips today. So you can see one thing I picked up: consolidation, expansion, consolidation, expansion. So it depends. Is there going to be like retracement? We already have like a fair value gap here. Let me get rid of this line. We have fair value gap here. Is price going to retrace? Is price going to reverse? What's price going to do basically? And we have a lot of like liquidity pools to the downside, right? So you can see a lot of lows that have not been tested to the downside. So price could actually come down to maybe take some of these lows. Who knows? Right? I'm not trying to predict anything because tomorrow we're actually going to do the same thing and just like look at what price did for that day. I'm not trying to come and try to like predict price movements. I just want to go over the price delivery that we had for each day. So for every day, I'm going to actually do end of market review and go over like, okay, look at what happened for today, look at what happened for today, look at what happened for today. And that's how I just want to do it, right? So that I can get better at like observing the charts, or like looking back at price and observing or understanding. Yeah, I think understanding is the word. Looking back at price and understanding what happened for that day, right? And I think if I do that for long enough, I'll actually get to the point where I'll be better off at like understanding my trading model better, right? So that's it for today. And tomorrow, hopefully I don't miss my trade entries. All right, that's it.